viewers, we continue with Inventories IAS 2. Today we are going to solve activity 4. Let's go to the requirements. Required, prepare the assets only section as it should appear in the statement of financial position and disclose the inventories note to the statement of financial position for the year ending 31 December 2019 to comply with the International Financial Reporting Standards IFRS for 10 marks. I've gone ahead and opened an Excel worksheet that we'll be using to answer this question. Now let's read the scenario. O&B Limited is a manufacturer and retailer of high-quality sound equipment. The senior accountant responsible for the preparation of the end-of-year management accounts has unfortunately taken ill. The financial director requests for assistance to finalize the end of the reporting period accounts. The following balances appeared in the records of O&B Limited on 31 December 2019. We've got land and buildings, 31 December, vehicle carrying amount, 31 December. Inventories, there is a question mark there. We need to calculate the value of the inventories. We have got bank at 7,000. We know the bank is a current asset, so we'll put it under current assets. Then the land and the vehicle form part of the property, plant and equipment. So we'll add it here. We'll say 400,000 plus 30,000. We get 430. That's our non-current assets. Then let's go to additional information. Inventories on hand consist of, we are given cost and the net realizable value. Inventory is valued at the lower of cost or net realizable value. Now we've got raw materials. Raw materials, the cost is 200,000, the net realizable value is 230. So the lower is 200. So value using 200,000. Then the work in progress, we've got 585,000 and 489,650. 489,650 is lower, so we'll use 489,650 like that. Then finished products, we've got question marks. We need to calculate the value of the finished products, both the cost and the net realizable value. The following information is provided with respect to the finished product. Manufacturing cost per unit, we have got what? 12,500. Delivery cost to customers. This is carriage outwards. It's not carriage inwards, it's carriage outwards. So the carriage outwards cannot affect or cannot be used to value the cost of the inventory. In actual fact, the carriage outwards should be used to value the net realizable value. The net realizable value is the difference between the sales price less all the costs to make that sale. So we say delivery cost of 250, we will remove the delivery cost when calculating the net realizable value. The storage costs cannot form part of the cost if it's not the storage of raw material or the storage of work in progress. If it's the storage of finished goods, it only affects the cost to sell the item. So the cost to sell the product includes the storage cost and the delivery cost. So the storage cost is 200. It will affect our net realizable value. VAT is a tax that is reclaimable from the SARS, so we will not consider it when valuing the inventory, as the company O&B can claim back that input tax or input VAT. Abnormal wastage per unit 50 Rand. We cannot value inventories using the abnormal cost, but we can only value the inventory using the normal wastage. But in this instance, there's no normal wastage. So the The abnormal wastage, we are not going to use it. Selling price, we are given a question mark. There were 1,500 units of finished products on hand. So the units on hand, the closing balance is 1,500 units. The sales agent's commission is 10% of the selling price. So we need to find the selling price as we are given a question mark there. As a result of the new competition in the market, O&B has decreased the selling price to 14,000. So the selling price of these items is 14,000 per unit. Now we go back to the commission. The commission is 10% of the selling price. You get 1,400 like that. O&B Limited values its inventory at the lower of cost, measured on the first in, first out basis or net realizable value. That's what we know using the standard, International Accounting Standard number 2. A meeting will be held on 31 March 2020 to authorize the current period's financial statements. Now we have read everything, now we need to value our finished product. If valuing the cost, we will sum everything. We've got 12,500, 0 plus 0, we get 12,500. The total cost for 1,500 units on hand, we will say 1,500 multiplied by the total cost per unit. We get that figure. Then the net realizable value, now we sum everything that is under net realizable value like that. Then to get the total net realizable value, we say the units multiplied by the total net realizable value per unit. We get that. Then we value at the lower of cost. The cost is 18,750,000. The net realizable value is 18,225. So we take the net realizable value is lower. So we value our inventory using the net realizable value. This is the value that we will take here under our inventory note here. So we'll sum here to get the total inventories. This makes up our inventory note. Then inventory is a current asset, so we'll take that figure to current assets like that. Then we add the total current assets. We get that figure. Then we add the current asset, the non-current asset plus the current assets. We get the total assets. This is what was expected of us for 10 marks. Please watch the video till the end, and also if you are new to my channel, do not forget to subscribe, and also share the video links with your colleagues. Thanks for watching.